Let's get some perspective on what's going on across the world from Seth Freeman and whether or not this positive sort of momentum could continue for global equity markets. Morning, Seth. As compared to the last time we spoke, things are looking a lot better. So on one hand, you've got strong sort of earnings from the likes of an Amazon or a Twitter. Apart from that, there's been some headway with regard to tax resolutions. We could have a new Federal Reserve chairman being announced very soon. And of course, Trump will indicate his preference on the 3rd of November. So lots of cues, and this time around, most of them being positive.
But all those things are great, and we could have a new 140-character tweet any moment to put a little twist in everything.
I'm sorry, Seth. Could you repeat yourself? Didn't get you there.
Oh, sorry. I was trying to make a joke that we never know when a new tweet is going to come and disrupt our progress.
Understood.
Seth, I should comment on this one, right? So while it's been about tweet and Trump, it's not surprising that Twitter has managed to eke out very good earnings, and this, I guess, could be attributed to Donald Trump completely.
Yeah, you know, it's like having a full-time celebrity spokesperson that you don't have to pay for.
Who turns out to be the President of the United States. But on a more serious note, Seth, is the global setup looking a lot more positive, a lot more stronger? The VIX has eased off as well. Earnings, surprisingly, haven't been too bad. And do you expect a quick resolution on the tax front in the US as well? I mean, what I'm trying to understand is whether the sentiment will continue to remain intact for the next few months, if not longer.
Well, that's very hard to predict. You know, we're getting conflicting signals in the sense that certain members of the Republican Party are feeling more confident about coming out and, you know, speaking out against Trump's policies and certainly his behavior as a president. On the same token, having passed the budget reduces the threshold voting for tax reform and tax reduction. And so, by the way, they keep, right now, the last few days in particular, they're framing tax reform as tax cuts. And I don't think that it matters what party or politics you're in anywhere in the world, tax cuts are pretty attractive to most people.
Seth, I mean, we've seen the dollar index strengthen a bit yesterday. The euro has cooled off in response to the moderate taper plan that has been notified from January to September. So now that we have the second biggest central bank of the world, I mean, there's no order to that, of course, but since we have the ECB also notifying their intent to gradually wind down liquidity, we could possibly, over the longer term, also see Japan doing it. So how does the overall global liquidity scenario change? Because I'm assuming that in the run-up to this taper, a lot of allocations will probably start to dry up?
Well, it's a good question because the headlines yesterday and this morning were all about the risks that bondholders have if rates were to really take a serious rise, especially with the headlines coming out of Europe. It's a little early to tell. You know, we still have some other serious problems around the world. We have, you know, increasing conflict in spite of some success in the Middle East. And we could also see, we talked about it the other day, further tightening in oil prices. And so quite a lot of kind of macro impacts that could create inflation finally.
Seth, we've also got some data expected in terms of the GDP reading from the US. How significant is this going to be?
I think it depends upon the components of our growth in terms of its impact on both sentiment and expectations. One of the things we're hearing now is that surprisingly, holiday sales are expected to look up this year. At the same time, we're seeing many traditional retail stores reduce the number of outlets and file for Chapter 11. So I guess the expectation is we're going to see a tremendous online shopping this holiday period. You know, we're already done with October for the most part, and it's only about 3.5, 4 weeks, less than 4 weeks away from Thanksgiving. And eyes are going to be on the Christmas season, holiday season.
Seth, what's the view on Asia? Because, I'm coming to you from the context of what we've seen on crude oil overnight. We are again back at close to $60 per barrel levels on Brent. Now, my question to you is that the current account deficit for many of, the Asian importers, especially big countries like India, has been a little unfavorable because of the currency appreciation that we've seen. And obviously the kind of import weightage that commodities like gold and crude command. Is there a likely risk of, scaling that $60 per barrel level and seeing some strong gains on crude oil and thereby some dynamics in Asia on the macro front deteriorating from what they already are?
Yes, this is always kind of an overhanging risk, especially for Asian countries and India being such a large importer. And that's about all it would take to really hurt the rupee in the short term in terms of rising oil prices, tightening foreign currency values of foreign currency appreciation. And that could also impact returns that foreign investors are looking forward to in the Indian stock market.
Seth, what about the other commodities? What is the expectation in terms of a trend? Are you expecting the metal space to continue to outshine in the next few months? I mean, could one consider playing the commodity space, probably being long on metals directly or probably indirectly by buying metal stocks?
Frankly, I don't follow commodities super closely like I do some of the other product types. However, base metals are expected to continue to be strong. They're rising. There's expectations both that China is going to continue to be a big consumer and that some of these metals are necessary for the changeover to electric automobiles, for batteries and so forth. So I guess the answer is yes. We're going to see continued growth in Asia, particularly compared to the US, over the next 10 years. So for speculators, I guess you have to look at your charts. But certainly for the long term, base metals related to energy efficiency and batteries should be a growth area.
Sumit, Seth, are you buying Indian stocks? How are the Indian markets looking? We've seen some earnings. Most of them haven't disappointed. We've had that big recapitalization plan being announced for banks early this week. All those cues and triggers together making the India setup even more compelling?
It makes it a little more confusing, frankly, for the last 5 years, and particularly since the restructuring laws, the bankruptcy law, so-called bankruptcy laws in India were changed and improved, that there was going to be a big effort to deal with the NPLs and NPAs and clean this through the system. This recently announced recapitalization plan sort of changes the rules about that quite a bit, and we see the impact with the PSU share prices jumping like crazy. So that part, I'm a big believer in blowing out non-performing debt and being able to redeploy that money, even if the banks have to take haircuts, into financing and making investments in new and better projects, and perhaps with borrowers that are more cooperative. So that part's a little confusing to me. PEs ratios are quite high. The other day, I get a lot of sell-side research from Indian brokers. And when the brokers are talking about a relatively small liquor distilling company selling at 30 plus PE as a growth stock, you have to become a little skeptical.